Hello, my lovely soul, and welcome to Unstoppable Confidence. I am your host, Lauren Glick. I am here to bring you my energy, my motivational speaking, and me being a confidence mentor. My mission is to inspire women to own who they are, step into their higher selves fearlessly, and live a life with unstoppable joy. On this show, we are going to cover everything from aligning your life to your higher self, setting boundaries, self-growth, and living a purpose-driven life. Let's get you living a meaningful life you cannot wait to wake up to. Stop driving and start living with ease and abundance. Cheers to living a magical life. And I am so grateful to be on this journey with you. Now, let's head into today's episode. I just wanted to say thank you, listeners, for joining in today on Unstoppable Confidence. Today we have Tess, and I absolutely love investing coaches and helping people learn how to invest rather than the traditional savings plan that is oh so common out there. It was about 5 years ago when I was like, wait, what's investing? And this was like, God, in early 30s. So I'm absolutely stoked for the conversation today. As Tess knows, I've been doing investing. I don't want to say investing on steroids, but since I've learned what investing actually means, it's been a huge game changer for me, right? So Tess, would love for you to introduce yourself. So the mic is yours.
Sure. So nice to be here. My name is Tess, and I'm the founder of Money Confident, which is an investing course for beginners or people in debt just trying to get their arms around investing and keeping the financial jargon to a minimum and making it as easy as possible. So I share a lot of free content on Instagram, and I have an online course for beginners as well.
I love that. And what you said right there of understanding the investing jargon. And yes, at first it could be really overwhelming, but that's why I love following people that I do trust on Instagram that do talk about these things, because the more you're around it, the more it just becomes second nature. So, Tess, do you primarily work with beginner investors?
Yeah, so a lot of people are already investing and they don't actually realize that they are, or they have some investments.
Yeah.
And that is no shade. Like, the first thing I will say is that conversations around money and investing that I have always start with no shame, no judgment. We're all learning, and we don't get this education in high school or college or anywhere. Yeah, nowhere. So when folks don't know things, I think there's a lot of shame, and you feel like you should know and like everyone else does. But I'm here to tell you, you heard it from me, like no one knows. Really successful. I work with men and women, but a lot of very successful women, like mid-career, that are crushing it, and they have no idea about the basics investing. And so it's just not something that's layered into our education system in a way that makes sense. And then when it is taught to us, it's full of financial jargon that's really unnecessary in a lot of ways. A lot of it is like
I'm putting together like a C Corps right now. And I was like, what's the difference between a C Corps and an S Corps and an LLC? Like, there's so much jargon out there. And you're so right. Like, why isn't this in the schooling systems? Like, you think it would be something like it's basic fundamentals of like money movement.
100%. And the acronyms for days. And I think the other conversation, especially for women, is that a lot of the conversation is around saving, which is great. And that's an important part to be able to invest. Yeah. But I saw this crazy stat the other day that said something like 80% of financial content that's created for women is typically around saving, whereas for men, it's largely about investing. And that is interesting in itself to really.
I just wanted to say barf right there. Pretty sure I've never said that on my podcast, but that is a really astounding stat.
It's crazy. And so there's the whole reason I got into this line of work is there's the gender wage gap, which I've always been fighting for. And I still work for a great company. I'm the VP of operations there during the day.
Oh, no way.
Yeah. When I'm not teaching finance at night.
Yeah.
And so I've worked with a lot of people and spent a lot of time teaching salary negotiation and helping people on my team or people leave fight for their salary, because the wage gap has always been something I care a lot about. And our company's great. We hire lots of women into leadership positions.
Right.
But what people don't talk about as much is the gender investing gap. So it's a double hit, right? You get the hit first because you're being paid less than men. And then we invest less because we want to do it right. And there's fear there, which is totally understandable. So that's kind of how I got into this, is because I wanted to change that and wanted to help. And like I said, I work with anybody, super inclusive, no judgment space, but really wanted to reduce that gap where I could.
I absolutely love that. I mean, that's interesting. And there's so much, obviously, Tess, that I'm like, okay, Lauren, ground your thoughts. One thing that I did want to touch base on was when you said that people are already investing without knowing it. What would those circumstances be?
Sure. So for example, one thing I always ask when I start a workshop is I ask how many people are investing, and most of the time half the room will raise their hand. And then I'll ask who here has a 401k, and almost everybody raises their hands. So a lot of people don't realize that a 401k is really an active investment where you can choose your own investments, and what you choose inside your 401k really matters because they have different funds, have different fees. And so even if you're not actively investing or don't have a ton of money to invest outside of an employer-sponsored retirement plan, it's really important to learn the basics so that when you get that 401k or 403b or whatever it is through an employer, if you're not self-employed, that you take advantage of that. So that is one thing that a lot of people don't know what they're invested in their 401k, which is totally normal, by the way. Most people
That's so interesting because I had a pension. So I also had a 457, which was, I guess, I thought it was a savings, but I don't know.
I actually don't know. I'm going to be totally honest. I don't know.
That's like a city. It's because I worked for city government, and I believe a 457 was the same thing as a 401k because it took out money before it got into my paycheck.
Oh, yeah. Okay. Yeah. I just Googled it. It's very similar. Yep.
Yeah. I just say 457. Like, I don't know. Cause that's the thing. It's like another investing term that I'm like, I don't know. It got taken out of my paycheck.
Yeah. And that's the thing, 403b, 401k, 457, they're all tax deferred retirement accounts. They're essentially the same. What's different about them is the investment options and then how they're feed, which is something that most people don't realize. Their 401k is not free. Like, there's a lot of fees in there, and it's important to know what those are. Yeah.
Interesting. Well, along those bases, yeah, I definitely was investing before I knew it. And that investment helped me fund my current investments. So every little thing counts, even if you're just starting off with like $50 a month in a 401k because you think you don't know what you're doing. So starting off small,
100%. And that's one thing that I talk about a lot. I spend a lot of time before I even get into investing, because basics of investing is not that hard once you learn the basics. That's like one of the myths that I try to bust the most. It's hard because it's unfamiliar. But it's not actually hard. It can be psychologically hard. But I do this example where, because people always say, I don't have enough money to invest. And I have an example of, like, if you spent $50 a week, didn't spend $50 a week, instead of going out to dinner, which you totally should enjoy your life. Like, I'm not shaming you, not go out to eat. But if you took those $50 a week and you invested it for 10 years, you'd have about $74,000. That's not nothing. That's $50 a week, right?
Yeah.
A lot of people can do that. If you continue to do that for 20 years, it's 230,000 or so. And then after 30, you'd have well over $500,000, $50 a week. So it adds up really quickly with compound interest. And that's one thing I wish one of those things that we should do in school is learn about compound interest. I don't know the last time I've done any geometry. I don't remember Pythagorean theorem or how to say it. but
or how to say it.
But I do know that compound interest would have been super valuable to understand, because then you can understand the exponential growth of what small amounts invested over time can really do for you. It's super powerful.
Interesting. I didn't know it was related to geometry, number one.
It might not be. I'm
okay,
not
maybe it's like statistics, maybe it's like economics. I don't know what it is.
So just to add to that, another myth, like you do not have to be good at math, clearly. or
clearly, because that's what the professionals are for. It's like, okay, here's my money, help me with this.
Yeah, it's not about being good at economics. It's not about math. It's about understanding the basic principles about investing and buying and holding for a long time.
100%. It's interesting, especially, and then I was on my phone trying to find somebody, because you mentioned, oh gosh, I don't want to lose both of these thoughts. Well, might lose the other one. But I was on my phone because you did mention about I don't want to say giving up. You're like, oh, well, you could still go out to dinner, right? But it's more or less of, God, what is the word I'm looking for when you kind of like delay the expectations, or when you like give up some portion of your life to have a better outcome? God, I don't know what that word is, Tess.
Yeah, I mean, there's delayed gratification.
Yeah.
But I actually, when I talk about this, I try to talk less about budgeting and more about intentional spending. Like, instead of starting with what are you going to cut out of your budget, let's start with what do you want to include. Like, for me, what's really important is outdoor gear. Like, I love rock climbing. I love hiking. I'm always going to spend money on things that get me outside doing fun stuff. Like, that's super critical to me. So I'm going to start there and then work other things into my budget. So I don't go out to eat as much because I prefer to travel and adventure. And so I think that starting with what's important to you and what fills your soul, and then seeing what else you don't want to spend money is from my perspective, a more positive way to look at it, versus like just starting to cut shit out for the, can I swear?
Oh yeah, for sure.
Okay. Just cut stuff out for the sake of cutting stuff out. So, I think there's this myth that like, if millennials stopped buying like lattes, we'd all be rich. And like, that's not.
Yeah.
like that is not the problem. The problem is like $300,000 worth of student loan debt. The problem is a lack of education.
Gosh. Yeah.
Finance. It's not because like, that is ridiculous shame, and it drives me freaking crazy when people say stuff like that.
Yeah, and I really like how you said that. And when I used to be a personal trainer, because when I retired, I went into fitness, and it's more or less of that mindset of adding things into your life that are healthy and keeping those really healthy habits, because then that kind of deducts the slack and the stuff that we don't necessarily need to have in our lives, because we live in such a society that thinks that we need everything. And once you start really assessing what truly does matter, then focusing in on those things, because I know everyone has those like monthly memberships that you probably don't know you have, that you could cut out. I have my monthly memberships, but I know what they are. I have Calendly, I have Spotify, and I have Zoom. I know those are 3 huge monthly memberships. And then of course, like cell phones and stuff that I'm not counting all that. But there are things like you might not even know you have. So that's like the huge first thing that I would
I mean,
totally see.
Come from the like a good metaphor for personal finance is nutrition or training, right? Like, you don't know what the first thing any nutritionist or trainer is going to ask you to do if you're trying to figure out a healthier way to eat. They're going to ask you to track your food for 2 weeks, right? And then and that, right, that's what everybody does. And the reason for that is because you don't really know what you're eating until you track it. It's the exact same thing with spending. Like, if you tracked your spending for a month, I almost guarantee you'd be able to find ways to reduce the amount you're spending and increase the amount you could potentially invest. it's just one of those things that you need to track. It's hard. You can't keep track of it in your head.
No, you really can't. And that's so huge of the basic understanding and the awareness of where your money is coming and going. And a lot of, I guess, fear can be brought up with that, of like the awareness of like, oh, this is how much I'm making and this is how much is going out.
Yes.
So that's also a fear-based thing. At least it was for me at the start.
Yeah. And it is a fear. There's a lot of fear around money, especially because we don't talk about it. So one, we need to normalize having conversations around money, but there's people I know that have extensive debt or spend, and they know that, but they don't want to face it. And if you delay that, you're just hurting yourself in the long run. And it's hard to sit there and go, all right, crap, when I was 17, I took out this much of loans and now I have to figure this out. But that is the first step, is like laying it all out on the table and being like, okay, this is what I'm spending and this is what I got. And then you can start to make steps. And that feeling of control. And one thing I have people do in my course pretty early on is calculate their net worth, which for those of you that don't know, it's just everything you own. Those are your assets minus everything you owe, which are your liabilities. And that's your net worth. So for a lot of folks, especially in their 20s or 30s, their net worth might be negative because they have some debt. Depending on the type of debt, it doesn't mean that you don't invest. But it's important to understand what your net worth is so that you can figure out next steps to get back to zero and then grow it so you can eventually retire. But you can't do it until you do the math and figure out where you are today.
I love that. It all goes down to the awareness of knowing where you're at. And you can't, and I really like the word of the control, but it's also more of structure around how you are spending. And I didn't really realize how much I loved structure because it cuts out a lot of the anxiety.
Yeah, 100%. And so when I've worked with people that have extensive amount of student loan debt, but if it's low interest, you can start investing. And by the way, that's a good rule of thumb. If you're wondering whether you should invest and you're saying, oh, but I have all this debt or I have a mortgage or whatever, if it's low interest debt, like under 5 or 6%, you should definitely be investing because the market on average is going to return about 10% historically. And if you subtract for inflation, it's about 8%. So if you're not investing, you're spending that money to pay down your student loans or your mortgage faster, you might pay less in interest, but you're losing out on this huge upside to benefit from compound interest in the market. So that's the first thing I would say, is that if you're in debt, just don't automatically assume that you can't invest. But then also, again, when you do figure out your net worth is negative or it's positive, it's not where you want to be. You build a plan. Like there's mental freedom in that, right? Like there's reduced anxiety. And that's the part that I love helping people get to. Like, I'm not into get rich quick schemes. My course is not a situation where you take it and you have money at the end. That's not how this works. but you have a plan and you know how to go forward and you feel good about it and you're confident in it. And that's the important part.
Ooh, I love that. And that led me back because I was just writing down. I was like, I remember the thing that I forgot earlier. Okay. It's not a get rich quick scheme. And this also leads back to a couple minutes ago when you were talking about long-term holds.
Yeah.
That's how I invest because frankly, like when you have these, and nothing bad about people that do day trading, but to me that brings up so much flipping anxiety and no idea. Like maybe it's just because it's like super foreign to me, but I am for sure one to buy and hold because I have seen the return on homes within things that I'm investing in that I'm like, okay, now I understand. This is fun, like.
Yeah, 100%. And I do have that stat actually. Active traders or day traders typically underperform the market by about 6.5%. So,
nailed it.
And the reason for that is because nobody can time the market. There's this great quote from John Bogle. He's the founder of the index fund, which index fund, to get rid of the financial jargon, index means list. So it's a list of stocks in a fund. That's all.
There you go. I like that.
But anyway, he's the founder of an index fund, which is an amazing tool for beginner investors. Mm-hmm. And he said, not only can I not time the stock market, I've never met anyone that knew anyone that could time the stock market. And that's super important to understand, because if you are working with professional money managers that are trying to time the market, or you're trying to day trade, there's really no way to know what you can do. Now, there are like day traders that have very complex, different like stop loss situations going on, and that works, and that might work. That is a full-time job though. Yeah. So to be a successful day trader, there's very few. I think it's like 2%. I might be making that up, but most day traders don't make a lot of money. I might be making that up. So I think the value in understanding the basics of investing is not just how to invest, it's the history of the stock market and stock market cycles. And that is that right now we're in a massive dip, right? It's gone down about 10% this year. But over the last 5 years, it's up, I want to say like 200%. I just did this math. I'd have to pull it up, but it is up a lot over the last few years. So it's really important to zoom out and not get caught in the weeds. And, every 2.5 years, I think on average, we enter into like a correction where the market goes down 10% and everybody panics. That happens all the time. We just forget about it. So it's important to understand the history of the stock market. And once you do, and you're like, oh, this is a cyclical situation where it goes up and it goes down and there's fluctuations, but over time it goes back up. The only strategy that makes sense when you know that is to buy and hold your investments long term.
Yeah. Because it's interesting you say that, because I definitely did not forget about the drop in the middle of COVID. That was super scary, because I put all my money in right before that. So
yeah.
But then shocking, it went back up. And I have good stockbrokers that are like, no, Lauren, you're not touching your money just because it went down so much percent. You're just not doing that right now.
Totally.
And I really liked your comment as well, Tess, of nobody could predict the stock market. And when I'm talking to my stockbroker, who's like, no, we're just going to put it in now, because we can't predict if it's going to go up or down. So it's like, yes, now is the best time.
Yep, exactly. And I'm actually just pulling it up. So even right now, over the last year, we're still up 3%. Over the last 5 years, up 80%.
Wow.
So just something to think about when you're panicking that we're down 10%. If you bought 5 years ago, you're still in pretty good shape there.
Yes, I definitely am. It's interesting because I'm like moving money around. So I had like just go into a personal, no money numbers given, but like I had a savings account within my financial institution. So I took out a pretty big lump sum because my stockbroker was like, you need to have money on the side that isn't just a savings account. It's not in a mutual fund. It's not in this. It's just fluid cash. I took that out because I finally found something I wanted to invest in. And now it looks like I'm negative, Tess, but I'm really not. So it's like, can you update that? It was just a savings account, people. So it's kind of annoying, but
Yeah, it is. And it's hard to obviously see it go down. And I always say investing is far more challenging from a psychological perspective than an actual execution perspective. But right now, even, if your accounts are down 10%, you haven't lost any money unless you sell. So just like people think about that too. They're like, oh, I've lost 10%. Like, you haven't lost anything if your money's still invested.
100%. And it is a psychological thing, because it's like you and who was I talking to that, that's how, and that's why I work with a broker, because I am such an emotional, like, if something goes down, I'm like, oh my God, let's pull it out. And my broker's like, yeah, Lauren, we're not going to do that. Like, and I'm like, got it. Okay, got it. As long as you think so. And they're like, yes, Lauren, we're leaving it there.
Yes, that is a good reason to work with somebody. If you know that about yourself, that is a good reason to work with somebody.
That is 100% my reason to work with somebody, because I am always like, oh my God, it's down. And they're like, yes, it is, Lauren. So if that's you, for sure work with a stockbroker because I can't do that shit on my own.
Yeah. Yeah.
So within your courses, Tess, I know you kindly kind of briefly touched on it of what you go over within, and I really loved the fact that you talk about the structure behind investing and understanding. Do you work with people one-on-one, as in like how to structure their investments? How does that move forward, or is it just a basic foundation of investing?
Yeah, so it's both. As
Okay.
part of my course, I do include one-on-one time with me because
Mhm.
personal finance is so personal and everyone
Yeah.
has their own questions. That being said, I do cover enough of the basics and like sample investment portfolios if you want to build your own. The
Nice.
beautiful thing is it's not that hard once you've learned the rest of the information around what a stock is. Like we go into the basics, like what is a stock? What is a
Yeah.
bond? What is a stock market index? And once you start to understand all those things, then it gets much easier to select a few investments of your own. So I'm not a financial advisor, so I don't offer
Mhm.
financial advice, but I point people in the right direction of how they could create their own portfolio. And that's really a personal choice on how you do that.
Do you have a recommendation on a foundational book on understanding the stock market by any chance?
Yeah, my favorite book is A Simple Path to Wealth, J.L. Collins, and he talks a lot about not just the basics of the stock market, and it's written for the average person, so anybody can really understand this book. But what he does a great job of is really elaborating on index funds as an
Mm.
investment and
Yeah.
how valuable they are. There are a lot of fees in investing, and this is one of those things that most people don't see. It's obviously not something that the financial industry and financial advisors like to
No,
advertise,
I don't.
but fees add up just like your investments compound over time with your earnings making you more earnings. It works the same way for fees. So, if you have $100,000, that's a 1% fee, and you think, oh, that's not that much money. Yeah, it's $1,000 this year, but $1,000 plus over 30 years is a
Yeah.
couple $100,000.
Yep.
So it's really important to understand what you're invested in and invest in things like index funds that are low fees that perform well. And
Mhm.
to make sure you understand, if you are working with a financial advisor, how they're compensated and what the fee structure is there. Because a lot of times when you start to add this stuff up, it can impact your overall retirement by hundreds of thousands of dollars, but we don't sit around doing the math 30 years out.
No, we
So
definitely don't.
yeah, so part of the course is not just understanding, it's the prereqs you need to invest. So do you have an
Mhm.
emergency fund? That's super important. Are there ways you can work on your credit so that you can reduce payments
Mm.
like mortgages and stuff? And then once we get into the investing, it's the basics, but also your options. Like if you want to work with a financial advisor, what to look for and what kind of questions to ask. That's really
Yeah.
important. And what those fee structures look like. And
Mhm.
that's why for a lot of people, and you can invest on your own. And again,
Yeah.
you gave a perfect example. Like if you're super emotional, there's probably that's
It's
probably
worth it, Tess. It's worth it.
um, but also there's some
Yeah.
value there in understanding why.
Yeah, and that's the thing is he's one of my really close friends. And that's the thing is really finding an investing advisor that you really do trust, because I had somebody before him, because I wanted to work with a woman. I'm like, "I am not working with you. You need to send me to a woman." And he did. And then that woman did not do very well for me, and I'm really upset by it,
Yeah, yeah, it definitely you want to find somebody that you trust. I'd also
Yeah.
say if you're starting your search out new, look for somebody that's a fiduciary. And a fiduciary is somebody that's legally
Mhm.
has to act in your best interest, whereas not all financial advisors are fiduciaries. So that's one
Yeah.
thing that's really easy to look out for when you're starting your search. If you have no idea, you don't know anybody, and you don't have an existing relationship, that's
Mhm.
something that I would definitely look out for.
100%, because yeah, I mean, and I just love that you talk about money and don't make it this like I don't want to say cringe, but like a lot of people
Taboo.
have, yeah, like taboo. Like I don't understand why people have a negative connotation around money. Like it's something that we have to survive these days. So first of all, Tess, I wanted to say thank you for first of all getting the word out there and knowing the stats with investing with women and really helping that status quo of normalizing and the what am I tracking? The gender age gap and really trying to get all that in alignment. I think that's really important. I'm all into the women empowerment. As you know, female retired city female firefighter, so I know what it's like out there. I didn't have the
I'm
gender.
sure. I'm sure your experience is amazing.
I didn't have the salary gap because that is super illegal within the government. But let me tell you, there were some other things that we could talk about. But within investing, I guess we talked about a lot of the beginning steps of working with you. Do you have any advice for somebody out there listening today of maybe a step, because we talked about a book, right? What is like something else that you could point them in the right direction for investing if you're brand new and you just don't exactly know which direction to go?
Yeah, so the first thing I would say, other than a book, is to figure out how money comes in and out of your life. So before you even get into investing, if you don't have a good understanding of what your cash flow looks like, it's not going to be super beneficial to just start investing without a plan. So understanding the basics of your financial situation and then deciding on an amount that you could invest per month is probably your first step. Before you even get into like, how do I do this thing? Figure out what your current situation is, because there might be some things that you can pay down. Like if you have high interest credit card debt, like you have to pay that down first. Anything over 6%, you got to pay that down. So that's the first thing I would do. And then after that, I would learn about index funds. I've mentioned it a few times, but to break down really quickly what that is, an index fund, again, index is just a fancy name for list. I could have called it list, but they use index instead. An index fund is a list of stocks. It's a group of stocks that tracks a specific list. So with a fund like that, you can buy a large amount of companies across different industries with one investment that is well diversified, that is going to grow over time, and you don't have to worry about managing it. So that's really like the best beginner investment is index funds. Now, the other thing that's great about them is because it's just tracking a list, they're not actively managed by professionals, which means the fees are much lower than your average mutual fund. So that's really the first thing I would learn. And once you figure out your cash flow, if you're like, okay, cool, I'm ready to invest some things, do some self-education on index funds. That book I mentioned is great, but honestly, if you just Google like, what is an index fund? Find a YouTube video, spend like 20 minutes watching it, and you'll find it. And there's tons of great creators. I'm part of a finance creator mastermind on on Instagram. There's tons of great creators. And now do your due diligence. Anyone you follow, like Google what they're, even me, like Google what I'm talking about, do your own homework. But there's tons of great creators. There's so many good YouTube channels. There's one called Investing with Rose that's really, really good. So even if you just spend, I mean, the amount of value you would get out of blocking half an hour of your week to listen to a finance podcast or watch a YouTube video on how to get started investing in index funds, like
instead of falling asleep listening to Netflix like I sometimes do, watch a YouTube channel instead. Investing with Rose.
Yeah, she's good. She's really good. I like her channel.
Do you have a channel? Do you have so much knowledge? Do you have a podcast?
Yeah, so I have. Channel? I mean, you should definitely follow me on Instagram. Wealth with Tess. I share a ton of free information, and I also have a lot of free like getting started guides, which I can share with you. That you can download easily. And then I also do free investing workshops occasionally. So I have one coming up on May 4th, 2022.
Which will be this evening if you're listening to this podcast episode.
Right. Yes. Join. It'll be recorded. So if you can't make it, sign up anyway, because you'll get the recording. But it is I'm working on complimenting myself for being more confident, but this is fire. Like, I wish I had this when 10 years ago, before I made all my.
What time is it at, Tess? Even though I do invest, I am writing it down on my hard calendar right now.
It is 8 p.m. Eastern, 5 p.m.
8 p.m.
Pacific.
5 p.m. Pacific on the 2nd?
On the 4th.
Oh, dear Lord, Lauren.
May the 4th be with you.
Yes, I know. Tess, investing. You like how I'm live and I'm doing this right now?
I love it. It's great. May 4th, 8 p.m. Eastern, 5 p.m. Pacific. And what I love about it is my goal is just to educate on the basics and to understand if you walk away from that workshop with one thing and you understand that you can invest successfully on your own with a simple strategy, that's what I want. And, whether you choose to do that right away or you do that later, that's okay. Like, I just want us all to be talking about this more, because it's like salary. When women talk about salary with each other, then we start to figure out that we're not all paid the same, and we need to take care of each other and blaze trails. And so if you just take the workshop and you learn a ton and you never take a course, like, I'm pumped, because you're going to someday share that with somebody, and small moves in your investing strategy could mean thousands of dollars later.
I love it. And being around like-minded individuals. So you might actually meet somebody that could help you with your invest. If you're like in that same space of just learning how to invest, you might meet somebody on the webinar.
Yeah. And if you sign up for the course, we have a part of the course is like one-on-one time with me. We have a community, a private Facebook group where we ask questions all the time. And what's great about the finance creators community too is I don't know everything. So if I don't know, I know 20 people. One of them definitely has the answer. So while I don't know everything, I have access to a bunch of really smart, amazing people that do.
And to talk about that, Tess, there is investing the money that you have to grow that investment, right? Like in the stock market, in real estate. But there's also investing within yourself, because if you don't know, you don't know. And you need to learn about these things to actually start investing to make your money move. So investing in yourself is huge. And I have done it over and over again. And I for sure. And it's like, I want to say it's taboo of just like, you don't know until you don't know, but like I could talk about investing within yourself, but you really don't understand until you actually do it. So highly recommend to invest in yourself in courses like this with people like Tess, who are super gung-ho about helping women, but also men within investing. And I think it's a really needed topic of conversation for sure.
Yeah, thank you. Yeah, definitely. Investing in knowledge is the best return on investments. Better than the stock market for sure.
No, it really is. And it's crazy, since about 5-6 years ago when I started doing self-development and investing in myself, it's just like night and day compared to who I used to be. And I'm like, that is so weird. Like, it actually works.
Yeah, totally.
I know I make it a joke, but at the same time, it's very true. Yeah. So when does your course start?
So you can register on May 4th at 8 p.m. right after the workshop. So it'll be open for a week and a half. And then I'm going to close it. I'm closing it so that I can have enough time one-on-one with people. That's really important to me, because there's always questions or fear, right? Like, you might learn all this stuff, but you're afraid to push the purchase fund button. And that's totally fair if you haven't done it yourself. So, so I have one-on-one type of that. And also because I need to adventure this summer. So I'm doing this workshop, and I'm opening the course for a week, and then I'm going to close it so I can spend time with the people that sign up. And
does your course talk about that, like pushing the button thing? Because I know I had some extreme freak out attacks when I had to press buttons, of like, go. I feel like, have you seen, speaking of don't watch Netflix at night, have you seen the movie? No. The show on Netflix, what it was with Anna Delvey. What was it? Anyways,
I haven't
seen
it.
She was an imposter on social media.
I've seen the previews for that.
So crazy, because she's a real person, and her social media is still up as a real person, and she still doesn't think that she was like a scam artist. And I'm like, that makes no sense. Anyways, if you haven't seen it, she's a crazy mofo. Go check her out on her Instagram. Don't know what the handle is. But she talks about wiring money all the time. And I totally felt like Anna Delvey when I was wiring money. And I'm like, can't I just like write you a check? You're literally right down the street from me. But apparently that's not how that works. But
yeah, no, I hear what you're saying. So we do talk about that. But I think that
okay.
to go back to your point about investing in knowledge, once you understand the stock market goes up over time historically, that you're buying a fund that has 500, if you buy a S&P 500 index fund or a total stock market, you can buy a fund that has 4,000 stocks. Some of them are going to go up, some of them are going to go down. So your overall risk is pretty diversified in terms of like buying one stock is way more risky because you're relying on that.
Agreed. Like if you're just investing in like Apple, like I don't have many just single stocks. Mine are all in index funds. Like very diversified.
Individual stock, like that's more of it, I would say, like an advanced strategy and not necessarily like if you're into it and you want to learn more.
Too much anxiety for me. No thanks. Let's just like diversify.
85% of my stock portfolio is in index funds, and there's a reason for that.
Yes.
Yeah.
I think they're a lot to me, it's just a lot more safe, and I feel more comfortable with being very diverse.
Yeah, exactly.
But on that, 2 more questions. Well, actually, I guess one more question, because I also already asked you about your book, your favorite book that you do have for investing. Do you have a favorite quote? I know you also mentioned a quote too. Is that your quote?
Yeah, I mean, I have another favorite book that has nothing to do with investing.
Okay, let's hear it.
And that one is this book called Big Magic by Elizabeth.
Oh my God, I just heard that one yesterday. Apparently that's the next book. This is why I asked that question, because when I get the repetitive answer, I'm like, okay, got it, Big Magic.
Yeah, it is a beautiful, like, soul storytelling book, like soul food book. And what I love about it is her whole thing is like, you have a gift or you have something to share, and whatever that is, like, you owe it to yourself and the world to do that. And so for me, what I loved about, I read this a while ago, and it came up again in conversation yesterday, actually, which is why I was thinking about it. But what I love about it is that it will make you think about what you can offer and what like individual gift you have. And so for me, now that I'm doing this, I don't do this to make money. I do it because I have this knowledge, and it makes me so freaking happy when I can help somebody not get screwed over by the industry and understand what they're doing and reduce their anxiety. And the power of that is just an incredible transformation to watch. So I feel compelled, like I have to share this knowledge.
Of course, and that's how I feel about helping empower women to become more confident as an entrepreneur and in life, because shit, like it was no small feat, like becoming a firefighter within a city that was in the top 5 homicides per capita in the United States. Like that's pretty insane.
By the way, you're incredible.
Thank you. And it's just like, I don't think of it like that, I'm just like, I just took the steps, and that's the thing. It's just steps. And when you have those actionable small steps, you could get to this like huge goal that you're like, how did I just do that?
Yeah.
And that's why I love what you just said, because when you're able to just give this gift of what you have done and your knowledge that you do have, I think that's amazing, Tess. And I just wanted to say thank you, girl. I'm for sure coming to your course.
So it's going to be great.
Yeah. So that is this evening at 5 p.m. Pacific Standard Time, 8 p.m. EST. And that will be like the opener to her course. So for sure, check her out. How do they find that link? Is it on your Instagram profile?
Yep. At Wealth with Tess on Instagram, and the link is in my profile. So join us, sign up. It's free, and you will for sure learn something. And I'll do Q&A at the end too if you have questions.
And then one last one. We're going back to that quote, Tess. I know you. I haven't forgotten about it. Do you have another quote for us?
Yes, I do. So one big, really important theme of investing in personal finance that we've touched on a few times and that I've mentioned is really around enjoying life, like not just investing every free dollar, but making sure that you're taking time to enjoy your life. And building wealth so that you can spend time with who you want and do what you want, where you want. Like, that's why we're trying to make money. We're not trying to make money so we can go home and count our bills and like be a millionaire. Like, maybe some people want to be a millionaire. I want to have enough money to do what I want with people I care about. So there's this great quote by Henry David Thoreau that just says, wealth is the ability to fully experience life. And that's really what the ethos of my Instagram handle, Wealth with Tess. It's much more, it's not just about investing. It's what can investing do for us so that we can create these epic, beautiful lives by having enough money to do what we want.
I absolutely love that. And I absolutely agree with everything that you said today, Tess. So I just wanted to say, first and foremost, thank you so much for being here today, giving us all the knowledge on investing and leading the way within helping women and men investing and having the power to do so and giving them the confidence as well. And all confidence is coming from the knowledge. So go follow Tess on her Instagram, Investing with Tess. And
Wealth with Tess.
Wealth with Tess. Everyone, that was Wealth with Tess.
No, thank you so much. I had such a good time. You're incredible. And I love the name of your podcast. It is the best.
Thank you, Tess. I thought so too. And the cool part is I didn't even think about it myself. So. I had somebody who was one of my mentors, and she was like, by the way, Lauren, like Unstoppable Confidence used to be a podcast. There was 10 episodes and they haven't been aired for like 5 to 10 years. So I was like, got it. Nailed it. It's mine.
I love it. It's so good. It's so good.
Thank you, Tess.
The picture is so good.
I love
it. Yeah. I'm a huge fan.
Well, thank you so much, Tess. And I love the connection that we made today. And I will be on your webinar tonight. So
awesome. Yep. Don't hesitate to reach out if you have questions anytime. And thanks, everyone.
Thank you, loves. Thank you for tuning in today. Hopefully you got a lot of knowledge because I know I have too. So on that, we will catch you on the next episode. And thank you again, Tess. We will talk to you soon.
Thanks, Lauren. Bye.
Bye.
I hope you are so excited about where you're going, because I know I'm excited for you. Thank you so much for listening in today. If you loved this episode, it would mean the world to me if you shared it with a girlfriend or posted it on social media. Tag me so I could personally say thank you. I am so grateful. And until next time,